Hello, everybody, and welcome to Extra Dividends. This is the program where your returns are more than just dividends, sometimes a lot more, and sometimes a little bit less. This is your weekend update for January 22, 2022. This weekend update is going to cover some new trades. We're going to evaluate some closed trades. We'll play some what if scenarios and see if there is a bright light on this. So not only was this the worst week for stocks in nearly 2 years, this was the worst week for extra dividends since its inception. And not only was this the first month this strategy took a loss, it is the only month we'll have taken a loss. The holiday shortened week started off with a sell-off and ended with a sell-off on all the major indexes. And as a result, our 4 new signals for the week were all filled, albeit it took until Friday for Sentinel-1. There were a number of firsts for extra dividends this month of significance. There were a total of 17 positions we had on that expired on January 21. Which is more than in any previous expiration date. So 10 of them had been closed previous to this week, leaving 7 to close prior to Friday. Obviously, the timing was not great. Of those 7, only 2 were closed profitably, leaving us with a loss on the other 5. So our biggest loss this week, and the biggest one to date, was in Chewy. And as I stated last week in preparation for expiration, I closed Chewy on Tuesday. And the reason that I did that and decided not to take assignment on this stock is because of this big blue line just shows a trend down for a long time. And a 50% drop in that stock and not any relief really in sight. So I took a loss of $1,075. That's not the whole story because we sold quite a bit of premium in the past year, about $400. So we're at somewhere north of $600 net loss in this particular stock. So American Airlines, not quite the same story, thankfully. We were down 27% from the time that we sold the put in this one. So that's just a little bit more. We just missed our break-even point. And I see some resistance here at the point where the stock is at right now. Hopefully it will go back up. So I've taken assignment on it and plan to sell covered calls in it in the coming week. Vuzix Corporation, this has been painful. We were in this one for a little while earlier, took a small loss. I know some of our subscribers hung on to it and turned it profitably because the stock had gone up. In this particular case, we've taken a 60% drop from our high and a 50% drop from our entry. Now, I am going to take this stock and keep it because the primary reason is because of the price. It's so low at $6.46 that really limits our risk. If we look at the risk being 0, that's $646 per 100 shares. That's our total risk. So it's a matter of risk versus reward. So that's why I've taken assignment on this, and we'll look to sell a covered call against that position. iRobot, a 31% drop since we got into this position. You see that the price has hit an area of consolidation. So I'm hopeful, again, that the stock will bounce back. And for that reason, taking assignment on it, and we'll see what happens as we sell some calls and try to bring it back to profitability. This is a painful one, a lending club. And in this particular case, this was a stock that I really liked. I saw that it had a good earnings report and another good earnings report, gapped up on both of those times. This one was in October. Came off a little bit on its highs, decided to sell the put instead of buying the stock, and only to see it drop 60% from its highs. So I was going to keep this stock, but I just lost confidence in it. and it still has a long ways down that it could go. So I did take assignment yesterday, but I'm going to sell out of the stock and take my lumps on Lending Club. So those are the 5 stocks that expired yesterday that we still had. I want to mention too, for those of you that watched my very first video before you even bought a subscription to Extra Dividends, you know that prior to COVID, I had a basket of stocks and watched it take a pretty good hit as the market went down 34%, I think it was. I didn't want to get caught in the same position. So that's when Extra Dividends was born. Today, I spent a little bit of time making a comparison on how I'm doing compared to the previous strategy. And so if you'll allow me, I'm taking 2 examples, probably being Captain Obvious here to make these comparisons. So Lending Club, which is the one we were just talking about, I told you why I like that stock, why I got into it. And so had I, instead of selling the put, just bought the stock outright, I would have paid $44.18 a share. And yesterday, I would have lost $2,327, which is a substantial loss versus a $635 loss. So we are going into a market correction. This is the kind of thing that happens. And this is a perfect example of the way that Extra Dividends limits our risk. It does not insure, and there's nothing that will ensure that there won't be a loss, but the risk is certainly limited. So taking a look at one other one, American Airlines, again, given where we had been with COVID, I like the opportunity that American Airlines offered. So back on June 11, I sold a put. I've sold a couple since then. And if I had bought the stock instead, today I would be down $739 versus the really less than $100 if you consider the premium that I have sold in the meantime. And so now I still have the stock. I just bought it at a substantial discount. So have I really lost $134 or $100? Not really, because I'm hoping that the stock is going to go up and I'll have an opportunity to sell calls. So that's how I look at this. And to be fair, I have some that we've played, the Ford, PFE, Pfizer, for example, that had I bought those, that would have had a bigger return. But what I like about Extra Dividends is that my risks are definitely limited in the case of a market correction. So I just wanted to review that. And now, again, that we are in a market correction, that can present a great opportunity for premium sellers as we are in this program. So we just have to be a little bit more cautious. And so on Monday morning, I won't be sending the signals out right after the open. Be waiting to see what the market does on Monday. So I'll look for them a little bit later in the day or even as late as Tuesday morning. We'll see what develops. If you have any questions, always write to me at extradividends@gmail.com. Meanwhile, have fun. Be careful. Bye for now.